Thank you very much for joining us today. My name's William. I'm joined by Jonathan Gordon.
Morning.
Morning, Johnny.
It's morning for me.
Yeah, brisky, frosty morning, is it in England?
It is,
yeah. Johnny spends his time sort of between Asia, or now he does, thankfully, that travel's a bit easier, but spends his time between Asia and the UK. So, and I know we've got a lot of people on in Asia today. So, yeah, we were meant to be joined by Ross, but sadly he couldn't make it. So you've got Johnny and I this morning. Right, we're going to have a little bit of a look straight to the subject in matter. We're going to have a look about Manchester, and we're going to have a look at the investment potential of the city. So, and sort of in terms of sort of investment for, obviously property. Right, let's flick to the next slide then, please. There we go. Thanks, Marika. Well, look, just a little bit about a history of Manchester. I think people know it, but sometimes people don't know the details of the city and the population. So you've got over 2.8 million inhabitants. It's kind of considered the capital of the north. It is the hub of the north. It is where everything sort of drives from, and it is leading the north forward in terms of sort of investment from government. So that's been a big thing for Manchester. It was actually the first city to be given sort of independence in terms of control of its investment sort of from central government. So that's helped it a lot. Obviously, there's a huge amount of jobs, and it provides a massive amount to the economy, over almost 75 billion pounds worth into the economy. So, the years where Manchester was a city that was in decline after sort of the slowdown of the industrial times in the UK, the city's prospered. Its economy has changed. It's a much more functioning digital economy. It's got a much bigger financial sector and a much bigger services sector. So really, Manchester is now a great city with a lot happening, and there's been a lot of investment into the property market, and it's one of the most exciting markets around the world. Next slide, please, Marika. Johnny, do you want to just touch on a few of these points?
Sure. I mean, as Will was saying, it's Manchester, generally the north of England, was somewhat unloved for a period of time, but now it's really back where it should be, driven by all the factors that Will was saying, and also I think probably we've got a slide on this as well specifically, but on the student side of things too. We've now got a situation where this term of north shoring, which is happening. So that basically means that many companies are moving from the south to the north, and the retention rate of many of the students or the universities there is, approaching 40–50%. Basically, that means that people are staying there looking for jobs, which historically they weren't. They would study in the north because it was cheaper than head to the south, because you could typically earn more down there, but times have changed, and now there's more sort of equality up and down the UK, and the jobs are being created there and people are staying, which is good news. Next slide, please. Will?
Yeah, I mean, look, this is quite a big slide actually, I think, because these two football clubs, one of them in the media at the moment for perhaps reasons that we didn't expect, well, maybe we did expect, the one at the bottom, but ultimately, Manchester's a brand now, and Manchester United obviously, has been a big brand of the city, and it's really put the city on the map over the last sort of 20, 30, 40 years that Manchester kind of became the most football club following Liverpool's success. And then we've seen the rise of Manchester City with the investment that they've had from the Middle East. So, there's no doubt that these two football clubs have increased the profile of Manchester, brought it to the attention in Asia, and of course the Middle East, and that is only going to continue. I think even that there's some Qatari interest to buy Manchester United that are potentially being rumoured now as well. So, the more that these two football clubs continue to grow, and they really are absolute monsters of businesses, these brands, the more Manchester will benefit. I think there's no denying that. So they're interesting for the city, and they've really put it on the map. And if you think about cities that compare to this, football clubs, for example, that there's nothing really of the size of these two football clubs out there. I mean, Newcastle's probably the other one that was purchased, and that might do a lot for the city as well, but a long way behind in terms of their global presence. Next slide, please. So we talked a little bit about the population, but it's interesting to see how it fell away. Look from that, the sort of early 80s, the population dropped, and that's really why Manchester was a city where you probably wouldn't, as an investor, buy. And it's taken a long time for things to turn, but you have population dropping, and now you've suddenly got a boom, right? So you can see there from the sort of early 2000s how population started to grow, and that is predicted to continue. I mean, this is an Oxford Economics slide, I believe, but predicted to continue up to 2035. So, you've got the 5th most populous city, one of the fastest growing cities in terms of population. And this is putting a lot of pressure on an already undersupplied housing market. And you can imagine during the 80s, during the 90s, developers weren't interested to build in a city where people were leaving and there wasn't much employment and unemployment was high. That's not going to attract a developer to buy a piece of land and develop. Whereas now we're in a situation where they're trying to catch up for all those years where not a lot was done. So really, really powerful data, that. Next slide, please. We've talked a little bit, I mean, I'll just continue on, Johnny, but we talked a little bit about the economy. I've touched on this in terms of sort of financial services and professional services, but, you've got 86,000 people in the tech industry, alone, a lot of fintech, a lot of startup going on. In terms of sort of digital and creative, the BBC was moved to Manchester. I've had a brain freeze now. When did they move to Manchester, Johnny? I do know the date, but I've had a brain freeze.
Gosh, I couldn't tell you, but it was 5-6 years ago, I think. But also, I mean, I think this is a trend that's happening in many of the northern cities in the UK. It's not just Manchester. I mean, the days of technology means that you don't have to be on top of your sort of counterparty these days. So whilst many businesses still have large presences in the southeast where they traditionally have, many of the sort of middle back office and creative parts of the business are now in places like Manchester in the UK, because you can communicate in real time for free. So it makes absolute sense to have people in areas that are cheaper, I suppose, to house them from a commercial position. So we've seen there much more diversity away from manufacturing. I mean, manufacturing, that's long gone, 100 odd years ago, and now that's been replaced, as that slide shows, by banking, e-commerce, logistics, and many. Much of the sort of technology is concentrated in one particular area in Manchester called NOMA, and then you've got the traditional sort of creative areas, such as Media City, where we've been very active over the years.
Yeah, I mean, Media City is home to the BBC, ITV, and it's about, I think in total, you've got about 25,000 people working in that sort of media sector alone. So it's the biggest hub of media jobs across the UK. Very good. Right, next slide, please. We've talked about population, and then this is just showing you sort of, where, we've looked at the different sectors, we've looked at where the jobs are, and now we're sort of looking at where the value add is, what economic what economic impact that has had, all those jobs have had. Interesting statistic is the GVA per capita. So that's the economy divided by the amount of people living in the city. And that's an interesting statistic. So it's not an average salary, it's actually the economy divided by the habitants. And you can see how that's gone up and up and up over the years, and is currently, where are you now on that graph? Currently around about £42,000, predicted to get up to £49,000 by 2035. So it's a good stat. And then you've got the total size of the economy growing, as you can see as well, the value out of the economy in the year 2000 at sort of 25 billion. And then today, 2023, gosh, where we are now, 2023, my goodness, over 40 billion pounds worth of value add to the UK economy. So this is a massive city now, and a great city to live and work in. And probably, if Johnny and I were being interested, probably not a city that we may have gone to or been offered a job in when we came out of university, right? Whenever that was, 20, 30 years ago. Whereas now, you know, you've got people coming out into the working world, and the first thing they're thinking about is, right, I might go and live in Manchester, right? I can't afford to live in London anymore. I can get a good salary in Manchester. I can live a good life. So, you know, it's a real change in terms of sort of what young people think of the city now. And it is one of the youngest cities in the whole of Europe.
Well, I think there's probably a slide on it, but it's close to 50% now. I mean, as I said, historically, you studied and then left just because you had to. There was no opportunities, but now, you know, there's real opportunity there to, you know, advance your career in a fairly diverse areas, a number of diverse areas. And obviously, what does that mean? It means that people are earning well, they can rent property and buy property, and that's, you know, fueling the market.
Exactly. Yeah. Next slide, please. Yeah, and again, you can just see how that's affected unemployment. You know, unemployment was very high, you know, touching 14% in 2010, you know, and then really we've seen that drop dramatically. There was a little bit of a rise, obviously, during the pandemic, but that's fallen away as the government reacted to that pretty well by sort of sustaining businesses, really, ultimately. So, yeah, I mean, look, the data points to the fact that this city's here to stay, and we like it for investment because we know the economy is very robust, very diverse, and growing. Yeah, these are quite good. These just show you the income bands of people. So what we've discussed here is kind of young people moving to the city and progressing their careers, and this is a really good slide for that because it shows you that in the year 2000 there are a big number of people earning in the sort of lower bracket of income. And there were a small, you know, 58,000 working in the middle bracket, and there were only 3,900 working in the upper bracket. Now, if you fast forward to today, you can see how that lower bracket's gone down, that middle bracket's grown, and even that top bracket's grown. Fast forward to 2035, Oxford Economics predict a massive chunk will move into the middle bracket and over 51,000 people into the top bracket of earnings. Next slide, please. Johnny, you were touching on education.
Yes, I mean, their graduate retention 51%, so that's one of the highest rates in the north of England. And you know, you've got a huge student population there. You know, up to around 20%. I mean, it says 17% of international students, but that's increasing year by year. And the weak pound in the UK means that the UK is even more attractive than it was for overseas students. So again, that's putting a squeeze on supply of property now, because yes, there's purpose-built student accommodation in Manchester, but there's never enough, and it's never in quite the right places for some people. So that is causing a squeeze on the housing stock currently, but also many students don't buy property, but once they stay there and they work, then they become purchasers they made that transition from renters to purchasers. So this has caught the town planners a little bit on the hop. I don't think many people were expecting in the north of England just how quickly this was going to take effect, that people were going to stay there and, you know, live and work. So I think we've got a future slide on that, but there just isn't enough stock coming through. And there's, you know, we're currently sort of playing catch up over the last 10 years of lack of stock that's come through, as well as, you know, very, very high supply, a very high demand now. But much of this is fueled by those three universities that you can see there.
Yeah, and students, you know, big student cities are great for investors. You don't always perhaps rent your, you know, apartment to a student, but it puts pressure on the housing market year on year. And it's a problem really for local people, and in fact to get a home when you've got so many students descending on the city every year. So they bring a lot, but they put a lot of pressure on pricing and rental market. Next slide, please. Well, High Speed 2, we all know about High Speed 2. It's been in the news quite a bit. It's going to Birmingham first, and then it will be extended up to Manchester. The further extension, sort of phase 3, was eventually going to get to Leeds, but that was mothballed. That was cancelled. That was one of Boris Johnson's sort of last announcements, I think, before all the troubles hit him. But ultimately, that was probably due to the pandemic and a rebalancing of costs for government. So we've still got a huge impact coming from High Speed 2 to the north. It'll eventually get all the way up to Glasgow and Edinburgh, but it will reduce the commute to London massively. So it's going to bring Manchester even closer to London. And it's going to mean that all those people that we've been discussing that commercial connection between the two cities, not just that commutability is going to be huge, but you're looking at the travel time coming down significantly, as you can see there, to just a couple of hours, which is massive. So yeah, we're all very excited about that. There's obviously international travel. You can fly into, I'm in Dubai at the moment, I think Abu Dhabi. You can get into Manchester from Asia, Johnny, I think from Hong Kong, can't you? I'm sure you, is that right? Yeah. So yeah. So you've got international airport with a big presence as well. So in terms of connectivity, it's better connected than it's ever been, and it's only going to get better with new rail investment. Next slide, please. God, we could talk about this slide for a long time. I mean, I remember going to Manchester 20 years ago, and the city just didn't look like the second city of the UK. And if you go there today and you walk around, Johnny's mentioned Noma, you walk around the city centre, you walk around some of these new investment projects that they've put in, it's amazing. It really has that feel of kind of a London feel. You've got some really nice looking glass buildings. We've invested in a number of beautiful buildings in central Manchester, and it looks like an international city now. There's cranes everywhere. There's a lot happening. There's a lot happening. So, St. John's, Enterprise City, down at Media City, where I've mentioned there's 25,000 people employed. There was nothing down there sort of 25 years ago. And there's now sort of 30,000 people working there. Trafford Business Park's another one. So huge amount of investment and regeneration going on in a city that needed it. And this is just improving the lifestyle and the future of the city. And it's allowing companies like KPMG and Deloitte and HSBC and these big banking companies, it's allowing them to actually move jobs. Johnny's mentioned the back end offices. The people in those jobs, they wouldn't have wanted to potentially move up north 20, 30 years ago because the city didn't attract them. Whereas now, only takes a trip up to Manchester to realize it's a city that you could live in. And it's got a huge amount of culture as well. Covered that. I still can't remember when the BBC moved, but I did know it. I've said it nearly every day I've done this job. Right, next slide then, please. Housing market. Johnny, do you want to jump on this one?
Yeah, I think, that's fairly clear in terms of where the population is heading. And, since it was declining 20 odd years ago, it's more than making up for it now. And what's happening is why that's being fueled, obviously, the job creation that's happening there. So I think it's the next slide, Marika, if we've got the next one. Yes, the housing market shows, that line in the middle just shows where it needed to be, where it is now. And, you've got the light coloured bars showing just the deficit that's in place at the moment. And there's absolutely no way that that's going to be covered anytime soon. And what that's done, obviously, that's squeezed up rental prices and it squeezed up house prices. Rental prices themselves over the last year have been up somewhere between 5 and 10%. We know that because we've got our own lettings business, so we can actually see in real time what's going on there. But in terms of price per square foot and where those prices are heading, areas like Salford Quays have come from sort of nowhere to, upwards of 50, 60, 70%. Probably in the last 5 years, that's saying house prices have gone up 70 odd percent since 2010. That's an average across the board, but there are certain high spots within Manchester that have outperformed even that. So as a business, those are the areas that we typically been targeting. They're not necessarily the most central areas, but they're areas within easy commutable distance into the sort of central CBD and also into Media City as well, where people earn well. So if you can reverse engineer that back to what people can afford from a rental perspective, that's your story in terms of an investment case or investment scenario in that. Next slide, please. Yeah.
Well, what does all that lead to? Well, we love the city. We've got almost 700 apartments under management now across Manchester. So Johnny and I have got 9 colleagues that work in the city full time, managing properties, collecting keys, meeting tenants, collecting rentals, dealing with payments of service charges, full management company. So we love the city. We've literally got nothing empty. We've been increasing rents. Every time a property comes empty, we get a rental, we get a sheet every week telling us what's happening. And it's 5 to 10% across the board as a minimum in terms of sort of rental increases that we've been able to apply. So there's a real shortage of property. Build costs are very high. And that's the problem. You know, that's what's happened now. COVID, the impact of COVID has slowed planning applications. It's slowed developments coming out the ground. That there's no denying that. And then the impact of the current inflationary environment that we find ourselves in means that developers just can't bring sites to market at the right price. We look at schemes all the time, you know, nice schemes, good schemes that would be beautiful to live in, but ultimately if you can't sell them for the right money because of the build cost, you can't deliver them, which means nobody's going to live in them. So there's a bit of a problem at the moment, which is going to cause an even further housing crisis in the UK, in our view. But this development, this is an existing structure. I mean, I was there, gosh, a few months ago now, and it was all boarded up and secure, and the developer is stripping it back to complete core and rebuilding and repurposing the building. So it was a residential building, but it's going to become a new build almost, pretty much, nearly.
I think that's an important point there, Will, because, you know, with inflation where it's at and construction costs where they're at as well, if you can save at any stage throughout the process by having in this case, the sort of core build in place, so effectively it's a refurbishment rather than sort of ground up build, then you're in a position to be competitive on the sort of price per square foot. I mean, we've also done a few projects which are conversions from office buildings as well, which again, if you've got the sort of superstructure in place, you're not having those massive steel and concrete costs, although clearly the building is in good standing and will be for the, you know, foreseeable future. If you can save on those sorts of costs, then from a price per square foot perspective, which, you know, is important from an investment standpoint, you can be more competitive, and therefore if your build costs are cheaper, your end price is cheaper, and if your end price is cheaper, you can afford to rent it at a better yield at a lower cost. So therefore you become more competitive within the rental space as well. So it all sort of filters through into the market and makes, you know, more of a stronger investment case. And as an investment business, clearly that's what we're looking at.
Yeah, exactly. Well put. I mean, if you had to build this building today, this wouldn't come to market. You know, you've got to dig the foundations, you've got to build the core. At this price point, it wouldn't be coming out to market. It will be built in the end, but probably not for a few years. But yeah, ultimately we've got 104 apartments in this building. We've got 1 bedroom. There's actually only 1, I think, and then the majority 2 bedrooms, with some with parking, some without. Very nicely sized, keeping the price down. We should have a picture of a map on the next page, I think, but ultimately, what are we, about 1.5 kilometers from the city centre here? We're just south of city centre, so we're just saving ourselves the value, because in the city centre you're paying well over £400 a square foot, up to sort of almost £500 a square foot, and some of the very impressive, and they are impressive, Johnny, some of the glass buildings in Manchester, but we struggle to see the value in those. You know, we struggle to see how they could be good investments at the price points they're sold at. Whereas this, when you're in that sort of commuter belt, very much sort of walkability commuter belt into Manchester, there's real value. Completion is very quick. The developers are on site now, so by the back end of the year this will be up and running and bringing rental income in, and it's our usual 20% deposit at this stage, with 80% on completion. So a really good buy to let property investment in a good value area of Manchester, in a great city. Yeah, just some further CGIs. We've worked with Mandel, who are building this, I think 12 or 13 times now. So we've got a really strong relationship with them. We know they build a quality product and they build on time. So a really strong developer, which again is always key when you're investing in a product. In terms of price points, we just thought we'd show just a few numbers for you in terms of what we've got left. You'll see there a schedule of units. Leave you to have a look at that. But yeah, I mean, really, I don't know if we've missed the map, Mary Carl. What's next? Floor plans, clean layouts. The building's actually sort of blocked into different blocks, but nice clean units. There's some really nice units. A lot of the units have got balcony spaces, kind of the sort of Juliet balcony kind of arrangement, and there's a number of parking spaces as well. So it's ideal, really ideal for investment, and a nice layout with a central courtyard as well. I think that just shows you the upper floors, and that's what I wanted all along the map. Johnny, you know this area very well, probably better than I do. Do you want to just talk it through?
Yeah, I mean, you basically got to very accessible into Deansgate. Unfortunately, this is all quite small in terms of the type, but you can see where the Bailey is, and just north of that, you can see the sort of city centre there. So that's about just over 1.5 km. So yeah, you could walk it, but it probably quicker to get either a tram or a bus. I would say you haven't got the trams just out there yet, but you've got to the south of that as well, you've got Old Trafford and the cricket ground as well. So you've got two very important catchment areas in terms of rentals there. We built something closer to Old Trafford further south, and again, that's going to be very popular on both the short-term and long-term letting strategies. I mean, we prefer the sort of ASTs, the traditional rents of 12 months, but it is possible to do short-term lets in these buildings as well if you want. And yeah, the transport times are a key part of where we choose a project. And as I said earlier on, we almost sort of reverse engineer it, and we've got a lettings business within Manchester, and the first thing that we do is talk to them to find out how rentals will be in those areas, what's the supply like in those areas as well, what people are going to pay, and then we work out if the price that we're looking at for the units is going to be sensible, is going to give people a sensible return on their money, and clearly around there's not a huge amount of stock. So the rentals will be very strong, fueled by the fact that you can get into the city, the central business district easily. Young professionals will want to rent there at a bit of a discount because it's not central, it's not one of these glossy high rises. So that's a deliberate strategy on our side to focus on that type of market. And yeah, absolutely, we've checked with our rentals company and Complete, and they've given us the sign off for that, so we're very excited about completions later on this year, when we can actually start to let the property out and investors can see some cash flow.
Yeah, exactly. I mean, if you look on the right hand side, you've got, it is small, Johnny, but I've been studying it just so I can point it out, but you've got number 1 and number 2, you've got little scholar hat there. That's the main university campus there. Number 2 is, so you've got sort of so many students over there, and then as Johnny said, south you've got Media City and Trafford, so you're kind of like right in the middle of sort of 3 really big employment nodes, being the university, the city centre, and Trafford and Media City. So tenant could easily they'll go either directions, I'm sure. Mention Mandel. Very delighted to work with them. We work with them in Leeds, we've worked with them in Newcastle, we've worked with them in Scotland, we've worked with them in Manchester many times. So, really strong outfit, and they really do deliver on time. I mean, I think we've had one of their developments run ever so slightly late, and that was the one in Newcastle because of some of the impacts of COVID, but we're talking a few months, just literally a 3 or 4 months, and communication was great through that time. So, their track record to deliver is excellent. And they build a really good product. Johnny touched on our company Complete. This is our rental management company that's all part of our group. We've got an offer on. We're obviously delighted to help people if they'd like us to manage their properties. We charge 10% plus VAT. We don't charge the finder's fee for the first tenant, and they're on hand to do a handover and also furnish the apartment if required. So it's the sort of support that you need if you are potentially buying remotely and internationally, and then Complete are in the city and on hand to do everything for you. They're very good. I use them myself. And I think, okay, process, pretty simple, but we charge a reservation fee, which is £2,500. If you exchange the contract very quickly, which is within 28 days, we contribute towards your legal fees, £1,000. And then you pay 20% on that exchange date as well. Yeah, so really that's a very simple overview from in words, and there's a slightly more complicated version on the screen there for you, but it's all fairly straightforward. And we have solicitors to handle the process, so if you need a recommendation to an independent trusted solicitor, we can do that as well.
Yeah, I think, you know, the process here, I mean, looking at the attendees this morning, and many of the attendees are actually working in the industry, either sort of property brokers or financial advisors. And typically the way we work is that, you know, you make the introduction to us, and then we speak to your investors, either on the phone or Zoom or whatever, or see them in person if we can, and explain about us, the business, and the products. So really, it's a case of you guys not necessarily having to become experts on this, but rather locate and source investors that would be interested in a sort of meaningful conversation about this, and we can help you. So there's very much this support network at this end. Either myself or Will be very happy to help in that respect. So really, that's the process and how it works. We're not expecting you to become, you know, experts in the Manchester property market overnight, although I know some people on this are, but for those that aren't, but do have investors that could be interested in the conversation, then yeah, please make that introduction, and we're happy to take the conversation forward. And obviously we'd love to do that with you involved in that conversation as well, so you can hear what's being said.
Yeah, brilliant. Thanks, Johnny. And you're over in Asia. When are you? About a week or so you travel over, don't you, to Hong Kong?
Yeah, a week on the 20th of February. So I'll be there to meet anyone that that I need to. We got a question here. When does that particular property finish or complete rather? So we're looking at later this year, November, December, I think, which is not a bad time, I think, because you know, you didn't necessarily want to complete on a property last year. Certainly Q3, Q4, the mortgage market was tricky, given the shenanigans that are happening in UK politics, which sort of spilt over into the mortgage market, and the perceived risk that the UK economy had at that point, with interest rates, you know, going up in conjunction, obviously, with inflation. Inflation is here to stay for the time being, so interest rates are up from where they were, but they're certainly not at the level of lending. As I said, the perceived risk that lay in the sort of lending market Q3, Q4 last year when it was tricky. So things are easing, have eased. There are more products around. So anyone that's starting to complete projects now has the luxury of choice, whereas, you know, Q3, Q4 last year, they just didn't. So that's, I think, good timing. So this completes in Q3, Q4 this year, so 2023.
Yeah, exactly. Pound's still very weak as well. So we're seeing people buying. We're seeing people look for good opportunities. We're seeing people buying cash more than ever, because inflation is threatening their savings more than ever. So they're kind of pushed into doing something. And I think a lot of people that have been sitting on cash are sort of cautious investors. They don't potentially like to invest in stocks and shares, but they do like property because it's physical, it's there, they can see it, they can understand it. So yeah, the market's still very much alive, but it needs to be a good product. And that's what we're doing at IP Global. We're a buyer, we're an underwriting business. So we approach developers and agree to buy in them from bulk. You know, we agree to de-risk their developments for them, and we sell on. So, you know, whenever the market's a little bit slower, it's a good opportunity for us. It's a good opportunity for our clients and our agents connected to us to go and buy exciting opportunities. So we can be very selective and very careful, obviously, what we do buy, but we can bring product to market that really makes sense. And I do think Johnny's right. I think interest rates aren't just going to suddenly come down, but we are going to see lenders need to lend money to make money. And we're going to see a little bit more of a competitive kind of bidding war as they kind of stabilize. And we're seeing that kind of now. I mean, you can get a rate under 5% with Skipton now. Okay, and that's just come onto the market for an international investor. And we'll see other lenders come in and dip underneath that 5% level. And hopefully we'll see them get closer to 4% in 9-12 months.
Yeah, I mean, the market, the UK government has said it's very much data driven, that it depends on where inflation is, which will then dictate where they position interest rates. So I think, you know, inflation is likely to be here certainly for this year, although it's starting to trend down. So interest rates, you know, have peaked now. People are saying at 4%, so they'll probably stay at that level and then start to tail off as and when they can. But going back to that point about inflation, it is relevant to the housing market as a whole, because many developers are choosing not to start projects now because there's still not enough clarity for them to, you know, price something that's going to be sold in, you know, 12, 18 months time, because they still can't exactly give a price on the construction materials that are happening in some cases, or the construction materials that they're using in some cases. Not every case, but some are choosing to, you know, step back and not break ground until there's a bit more certainty. So what does that mean? It means there's less product coming onto the market, and that will filter through into, you know, less supply on the rental market and less supply on the resales market as well, which probably isn't bad at the moment. It's helping to prop the market up in the face of some sort of economic headwinds. But what that means is that, you know, chronic undersupply is not going to change anytime soon. So from an investment standpoint, that's important, because ultimately, you know, it does come down to the supply demand dynamics.
Yeah, exactly. That's why we're seeing such a strong rental market at the moment as well, which is helping our investors, you know, who are having interest rates increase slightly. It's helping their cash flow.
Yeah.
Very good. Right then. Well, thank you for joining us. Johnny will be in Asia. Delighted to speak to anybody about opportunities. We've got a scheme coming in Edinburgh. We've got a scheme coming in Oxford. And then I think we're back in York. I think that's pretty much, maybe Berlin. But yeah, that's kind of what's on our agenda in the next sort of 3 or 4 months. So we're very busy, and, you know, we'd be delighted to connect with a few of you. But thank you very much for joining us today.
Thank you.